So we'll be talking about, as you know, the new models of venture capital, the new liquidity chasm. Probably you've heard of recently that Sequoia decided to restructure their whole business model. So basically, what they are working on now is on putting all their US and European VC funds into a master fund. And the idea is to provide much more liquidity to the whole business model. As you all know, when it comes to the whole VC space, liquidity and your returns are, if you get a return, obviously, they are far, far away in the future. Could be 10 years usually, but even in some cases could be 15 years, as it is in life science. I'm Victoria Gago, co-founder of the European Blockchain Convention, also co-founder of European Tech School, a blockchain school. Together with me, I have Miguel Valls from Alta Life Science. Yes?
Correct.
In his case, sometimes the exit is in 15 years. At least that's what you explained me.
At least 10.
And we also have Frank Perkins from Inari. So I think first I'll just let the two of them present themselves shortly, and then we'll go straight to the question. So Miguel, please go ahead.
Hi, thank you for having me here. I'm Miguel Valls, originally from Barcelona. I'm an entrepreneur and an investor. I'm co-founder of Alta Life Science, life science generalistic venture capital fund, and also I'm co-founder and chairman of the Data Capital, an investment firm that basically does deep tech investments. I'm also the co-chair of the San Francisco-Barcelona Sister City Committee, and I'm very involved on the space of life science, deep tech, and crypto.
And crypto. Frank?
Great. So thank you for having me. My name is Frank Perkins. I'm CEO of Inari. I also am from Barcelona, even though the three of us are doing the conference in English today. My background is in technology, primarily in AI and in blockchain. I've been working for the last 15 to 16 years within the fintech, finance, and insurance industry, and the applications of blockchain and cryptocurrencies and alternative technologies to here. I'm also a mentor for several startups, Axio, and usually get dragged in to speak about blockchain every now and again here in Barcelona.
Fantastic. Yeah, we will talk about new models of venture capital and very much also how the whole crypto and blockchain space has influenced this, because it's actually quite exciting. So I think first question is basically, if we look into some of these new technology or new ways of raising funds and how fast, well, on one side you can raise funds, but also how fast you can sell your assets. This is something we've seen in the blockchain and crypto space. So you've probably heard back in 2017-18, we had the whole ICO boom, initial coin offerings. Billions of money went into projects where you would invest with crypto into, in some cases, just a PowerPoint. But today, in 2021, we are now seeing token sales. So in many cases, VCs are also getting into the space, investing in tokens. So not in equity, but in tokens. So how do you think that blockchain, crypto, and the token sale ICOs is influencing the whole VC space when it comes to liquidity?
Well, I think we're seeing a big, I would say, evolution of the trend on the traditional venture capital. One, we're seeing big funds like Sequoia, as you said, starting to think that liquidity is important, and that really having all these assets over 10, 12 years without having liquidity, maybe it's not so good, right? And why is that happening? I think that the crypto space is really leading there. We have firms like Dragonfly, which just launched a liquid crypto fund. And it's very simple because, you know, the whole crypto space, which is a grassroots kind of movement, shows that startups or protocols or projects, since very early days, even since the seed rounds, they become liquid. That means that, that you have access to buy or sell these assets very early, which could be good or bad, but at least it's giving you the option. So whenever you have optionality, things change, and I think that in general, investors are starting to pay attention. And specifically, the other thing that is very important is that traditional VCs, many times they don't have the opportunity to participate in these opportunities, right? Because their mandates do not allow to them, let's say in Alta, we don't have the possibility to really invest in liquid assets, right? So here we are starting to see this chasm, right, of liquidity where you have the optionality to invest depending who you are or not. And I think that's an important movement for the future.
Indeed. Frank?
Yeah, I think with changes like Sequoia, we're actually starting to see investment mechanisms that better represent the very fast-paced change within the technology landscape, and conversely, at the other time, the very not fast-paced change of the technology landscape. So what do I mean by that? So we're talking in the green room before about sort of a very famous case with Google. There was an initial investment, I think, by Sequoia in Google a very long time ago. It's like a 23 million investment, and due to their mandates and the way their funds work, they have a 10-year horizon on coming out of that deal. And so when they come out of the deal at whatever that number was, 1.9 to 2.5 billion. But now this is a multi-trillion-dollar company, and so I think having the mechanism to be very flexible and saying, okay, these are very long-term bets. We don't want to have that constraint. At the same time, we want people to be able to make liquid their investments and come in and out as they see fit. I think that's important. On the other hand, on the more shorter-term thing, or piece, when talking about crypto, it's a still very undiscovered territory. We're still figuring out what the applications will be, what it won't be, and so you'll see a lot of, and we are seeing a lot of crypto applications and blockchain applications that have trade sales underneath the traditional 5-year cycle. So someone will come up, they'll do their white paper, they'll have a very fast deployment of capital, they'll provide value, and then a Visa or MasterCard or whatever the entity will come and buy that technology. So you have very long-term investments that you need that mechanism, but you also have very short-term investments that need an appropriate mechanism as well. That the mindset changes when deploying capital, I think, to these vehicles.
Interesting. Yeah, well, at least in case of Sequoia, I know that, as you mentioned, having the opportunity to stay much longer in a company, it's one of the pluses for them, right? So actually, also what they want to do is basically, if you invest in their master fund, you're not just going to pay a management fee for the fund you would traditionally be investing in, but also if you get into the master fee, you would have an additional fee. So obviously, it's a way for them to be more flexible when it comes to liquidity and their investments, but I guess also a new business line, right? So this is also interesting. But obviously the whole crypto blockchain space has pushed a lot forward this whole liquidity space. I mean, the liquidity question. So so usually we would say that liquidity is cash, right? But that cash is king. But maybe the actual sentence should be liquidity is king, right? So maybe you can share a few thoughts here. I mean, why are we not any longer talking about that cash is king, but that liquidity is queen?
Yeah. When we're talking about blockchain and crypto, for instance, which I think is going to be a very substantial part of our economies going forward, we're actually not talking about cash, right? And so I think we should start, thinking in those terms. And when we're thinking about liquidity, there's many different instruments that equate to liquidity. So when you have a technology and you have a mechanism whereby you're sort of pushing cash to one side and you're able to trade in very, very different ways. I think the concept of liquidity is very, very important, but it's not a cash-constricted construct. It's actually a construct around value and a construct around moving sort of that representation around.
I think for me, liquidity represents freedom. I think what's interesting about the crypto space and the crypto philosophy is that really for the first time in history, we are democratizing the space, meaning that if you want to invest in a fund like ours or any other big VC fund, usually you are kind of elite, right? Because you need to have enough funds to have access to that. So access is extremely limited. In contrary, crypto, you could have invested in any of the protocols that today are up to trillions, like Bitcoin, with $10, right? A good investor with $10 very early could have a significant position today, just because they invested well and they had the access. So I think that we are entering the era of access, and I think this is extremely important. And for the first time, kind of retailers and professionals, we have a playing space. We are playing the same space, right? We do not have the advantages that we had before, and they have the access to really play the big league. So I think that's extremely important for the future.
So there's actually an interesting question here around access, just to ask that, because, and as you mentioned before, investment was privy only to professional investors with methodologies, with that do this as a business. And now with the access to anybody in the street to do that, and we were talking about before, one thing that we're starting to see is that it's helping towards that volatility. I think there's two examples, right? The SEC will publish an advisory on Bitcoin, and then the price of Bitcoin suddenly drops, right? In a much more volatile way than a traditional stock with a regular investor. On the other hand, then you have famous people that can just come out, make big, bold statements, and that price will rise again. So, I mean, what are the thoughts? What are the dangers or the thoughts do you guys think around having that access?
Yeah, well, first, just one point to what Miguel said. I think, at least I remember back in 2017, I was working in a private equity fund here in Barcelona, and when I realized that I could invest into Ethereum, I was like, wow, this is amazing, because I was like, it's kind of like unfair, as you were saying. Obviously, only institutional players, investors can get into private equity, the whole VC space, but what about the rest of the world? So obviously, crypto is kind of like, or at least this is the idea. I mean, the idea is to distribute new wealth in a better way, right? New wealth in a better way. I'm not saying I'm going to take Warren Buffett's money and distribute it, but like new wealth. So I think this is very important, and I think for me that was very exciting. I was like, wow, this is amazing. And I think for a lot of people, right, having access. But yeah, as you were saying, when it comes to, what kind of like more, I mean, analyzing, what do you mean, like when you get into these kind of investments or
Yeah, I think when you have professional investors, there's a process, and I'm not saying it's good or bad. It's
the diligence process, for example.
Yeah, the diligence process, and of course these people representing money of other parties. And when you have people like me, I'm not a professional investor. I've made small investments. That you're able to go in, and then your opinion of asset is more easily swayed by how the wind is blowing. I mean, that presents, I think, other challenges as well.
Yeah. Well, I think at least one thing in 2017, if you were getting into ICOs, or in 2018, you were getting into ICOs, since there was no institutional investors getting into the space, it was a bit more difficult to do your own due diligence. But I think at least if now you can see Andreessen Horowitz, one of the leading VC funds in the world, getting into a lot of crypto projects, and I think at least they're doing their due diligence, so you can kind of like follow them. But I guess also, I mean, what you're trying to refer to is like when Elon Musk says something, and then the whole space gets into Bitcoin, and then he says that it's rubbish because of the energy consumption, and then Bitcoin drops. So yeah, how do we fix this? Yeah, good question.
Well, I think for the audience and from everybody. Everybody should start understanding crypto for the future. And it's not about Bitcoin or Ethereum or anything like that. I think Marc Andreessen puts it very well. So what crypto is showing is that we are having architectural shift in technology. That's the base change that it's happening. The same thing that we had in the 90s, kind of the internet, and let's remember economists like Paul Krugman wrote an article saying that internet was not going to be more important than the fax machine. That was said in the 90s, okay? Nobel Prize. So today we have the same thing. People do not understanding crypto. Let's remember that crypto is only this technology that is running on top of the internet, that is an architectural change in technology, and also that the legacy fiat system is moving there. And you just need to only see about what's happening with the CBDCs, the central bank digital currencies. They're running on top of blockchain, right? It's the same. They want to control it, of course, like governments want to do, and kind of the crypto space is a little bit more independent, right? But this technology is here, it's here to stay, and it's not going anywhere, and it's extremely resilient. So I think that we all better really understand that deeply, because it's going to really change the world. So there's no other option. Or you get it, or you don't. Usually boomers do not get it too much, like Warren Buffett. But then we see the results of Berkshire Hathaway, right? That they're doing really bad lately. But you should have the intellectual interest to understand the technology. You cannot comment on that technology if you do not understand it. You know, I'm 53. I really have watching Bitcoin since 2012. I didn't put a finger until 2018 because I really didn't understand. But I needed to go and learn and learn the technology, because if you do not learn it, I mean, you really don't know what to do.
Yeah, I totally agree. I mean, I'm 34. In the late 90s, when there was the whole internet boom, I was not aware of it. I remember connecting to the internet and doing a few things. But I really believe that right now it's the same. I mean, if you're smart, you get into blockchain and crypto, because this is the future. We're only day one. And yeah, you need to dig into the space, educate yourself and understand, because things are going to change so much.
They are changing.
They are changing, exactly. They are changing, exactly. So, okay, so let's try to talk about now these new governance models. So basically, as a VC, investing into, for example, token sales, as Andreessen Horowitz has done. I mean, from a VC perspective, how should the governance models be? Because things are changing completely.
Well, I think here the thing gets a little bit complicated, because what we need to understand is that when you invest in liquid protocols, as it happens in all these early stage protocols, specifically in crypto today, but probably in the future with the tokenization or digitalization of most of the assets, that's going to move from crypto to many other space. You just need to understand that crypto is an advanced technology of what's going to happen in many other spaces. You are kind of changing the game, right? Meaning these protocols start acting like currencies. Therefore, they are not acting like kind of our traditional startups that we are used to invest. As soon as you get this liquidity and the protocols start acting like currencies, there are other things that are playing, like monetary policy. So as an example, why the dollar is the reserve currency of the world? Because most of the people have dollars around the world, right? In the third world countries, people want dollars. In the first world countries, people want dollars. So the dollar is really decentralized. Of course, it has the Federal Reserve, right? That controls the whole thing. But everybody somehow have access to the dollars. Think about the protocols in the same way. So on a traditional startup, you have the founder owning maybe 40 or 50% of the company for as much as he can, and then the VCs will come in, and then you have this diversification, and slowly it gets more decentralized. But on a protocol, the number one thing that you need is decentralization, like the dollar. So very fast, you really do not control more than 5-7% of the protocol, right? As it happened in Ethereum, or for sure in Bitcoin, or any others. So investors need to understand that. Concentration is not good for this new world of liquidity where we are acting like currencies. And I think that's one of the most important points that everyone needs to understand.
Agree. Frank?
Yeah, I mean, I agree with that. I mean, even though it can be decentralized like the dollar, the mechanics of how crypto and tokens or NFTs work are going to require a significant mindset shift in how you approach them from a VC perspective, a significant mindset shift on how the governance models work, not only from a VC perspective, but from governments. I would say I wouldn't see these governance models. Sometimes in the crypto space, we look at governance models as something bad. They're not always bad. And if you have forward-thinking people, they're good. But I think there's going to be a Darwinistic correction within the space with regards to governance and approach to this to actually fit to how crypto and NFTs and tokenization works. So I think we're not completely there yet. And while we have that shift, there's going to be a little bit of a mismatch.
Indeed, yeah, we're still not there yet. I know, going back to Andreessen Horowitz, they are trying to figure out themselves what they should do with their investments in yield games or other token sales they've invested in lately. Because, yeah, usually they would maybe attend a board meeting each quarter. But in this case, there is a lot of activity going on. You need to be much more active in this new governance model. So they are trying to figure out how they can give away or delegate their votes, their power in these new systems to people, organizations that are active. Because at the end of the day, obviously, you want people that are active in a project and that knows about the project to take smart decisions, right? So it's a tricky question, and they're looking into it. So exciting. Okay. Yeah, let's continue. Yeah, you touch upon a monetary policy, but so it's also linked to these new governance models. But what about what kind of new management skills do we need? That's also, I think, a tricky question.
Well, I think and for the VCs in the audience, I think that the traditional venture capital model is not going to work. Because you need more expertise than that, right? I think that it's going to be an evolution of what we have had on the venture capital, a lot of knowledge and expertise in certain areas that you are investing in. But as soon as you are introducing this new concept of currencies, of monetary policy, in the end of liquidity, you really get directly exposed to financial markets. So my humble opinion is that in the future, and at least in the first movers that we're seeing on the space, what we're getting is the expertise from the traditional venture capital industry, plus the financial markets industry, put together to really start moving forward and understand and help the evolution of these companies, protocols, however you want to call it, right? But we are modifying the skills needed, to invest in the future. And this is very new. The industry is not like that at this moment. We just have the first early adopters, but I think that going forward, many more are going to be adopting this new model, and we will need to just get more expertise on the space.
Yeah,
Frank?
I think from the new management skill perspective, I think one of the nice things about these technologies is they can address very niche use cases and be very, very effective in pockets of areas. What I mean by this, so before we've had technologies that have been very broad, and that's corresponded to a very broad and very single tool set to be able to service these technologies and these companies with capital. And I think one of the interesting things about blockchain technologies, we can go in and you can have a particular technology that services transmissions or DeFi, a particular type of token or NFT. So it's a very, very specialistic marketplace. So I think in these new management skills, VC firms would be very, very well served in actually gaining expertise in these different niches. It is very different from standard technology because the problems that are being solved are actually very complex and very, very specific. So I think we will see in that space a lot of sophistication from a knowledge perspective and from a vision perspective there. And then connected to that, having the right type of thought leadership within the VC space and within these technologies, because where we are today, and we've touched on it many times, we're in the very, very nascent stages of the technology. What it's going to be doing 5 or 10 years from now, we can imagine, but probably not, right? And so having forward-thinking people in these vehicles, servicing with capital these new ideas, I think, and being able to understand is very important from a management perspective.
Indeed, indeed.
I think that also, for the entrepreneurs in the audience, there are new skills also that the entrepreneurs need to have. We all understand the traditional model. How do you want to start your startup, your company? How do you want to protect your equity and then be very smart of how this equity is being diluted in order to really be excited in the project until the end, etc., etc. Now it's a new game. So the new game, I think it's even a lot more exciting than the old game, but here we are changing because now we're moving towards the economy of network effects. Right, and the network growth, as we have seen with the traditional big tech, is extremely powerful. But also, as an entrepreneur, you need to understand the dynamics of this new evolution, right? And if you protect too much your equity, and if you do not have enough nodes distributed, probably your protocol is not going to really have this access to the network effects that you really want to have. So I think it's also very important for all of you entrepreneurs to start kind of getting educated and understanding these new dynamics because they are extremely important for the growth of the new projects.
Indeed, yeah. The network effect when it comes to blockchain and crypto is basic. Indeed. But so we have very few minutes left. I don't know if we have a question for the audience. We can answer. Any questions?
No question.
Everything
No question.
under control?
I don't know if I see any.
Yeah,
there.
One question.
Around
Go ahead.
Yeah.
Hi. Well, first of all, thank you very much. Very interesting, all what you explained. I'm curious to learn, what do you think are going to be the main challenges? Do you think you are going to have challenges with the future regulations? I work quite a lot in the payment sector within fintechs, and many of these companies are a bit scared of the new regulations that may be coming, even in cryptocurrency. So do you think you will have some challenges here, or new regulations in 3-5 years, or things are not going to change? Thanks.
I think, that's a very good question. I think regulation is key, specifically on the crypto space. I think the other spaces are well regulated. Crypto space, let's just do an analogy. So today, for the ones that remember, we are more or less in 1997, okay? 1997, why? Because in 1997, we have approximately over 150 million kind of internet addresses back then. Today, we have 100+ million crypto addresses, wallets. So more or less, we are on the same time. For the ones that lived that time, in 97, let's say the unregulated, well, most things were unregulated, right? But I would say kind of the big driver of internet was porn. I don't know if you guys remember. Porn was not regulated, and there was a lot, it was very messy, but it was a big driver of internet growth at the beginning, right? Then regulation came, things changed, and we have the internet that we know today. I think crypto, it's very similar, still very unregulated. I think regulator, except in certain countries that are more advanced, still struggling to understand the technology. Some of them want to crash it, like the Chinese government. Others, like the US market, are more cautious, but still really don't know very well how to act or who needs to act. But I think it's extremely important. So at least as an investor, on my side, I only invest in things that are aligned with regulation or that the path of least resistance is towards less risk, right? I think that the completely unregulated, the cowboy style kind of entrepreneurs or investors, I mean, they can get burned because regulator will come, and I think it's good to have a regulation, but we need to have a clear regulation. The problem is not regulating, as it's happening in many places. No, it's happening in Europe, it's happening in US, it's happening in many places. But I think, and for me, I would ask really that regulation comes and as fast as possible in order to have more clarity of where we can or we cannot go. But let's not make mistakes. Forbidding the things is not an answer, and it's not going to work. So we need to find a way of really regulating properly.
Just very quickly on the adoption piece, I think once that regulatory framework is there, the adoption, I think it's akin to internet. If same way businesses didn't adopt internet, most of them died. Those businesses that don't adopt this new way of trading, this new way of moving assets around, will not get on too well. But I think it is contingent on regulation.
Yeah.
Yeah, and just one last point on regulation. So the European Commission has been working on a new regulation called Markets in Crypto Assets, MiCA, and they started, I don't know, already a year ago, and the idea is to introduce this new regulation law in around 12, 14 months. But I guess the question is always, I mean, we talk about blockchain crypto, it's going so fast. So when you introduce a new law or regulation, how do you make sure that you're actually promoting the innovation, right? And also, obviously, having some, protecting consumers, protecting everyone involved in the crypto space. So you want to have that things are evolving, but also at the same time, sometimes with the regulation, if things are going so fast when it comes to blockchain crypto, it can also put a stopper on the evolution. But something is coming up from the European Commission in around 12, 14 months. So, well, very exciting panel discussion. I think we could continue here for for another hour. So thank you so much, Miguel. Thank you so much, Frank.
Thank you.
I don't know if you want to say a last word, but we will be finishing now.
Well, for me, I really would recommend everybody to have an open mind about the crypto space. Just have an open mind. I mean, it's not that you need to like it or not, but have an open mind because it's really the driver of innovation at the moment, and also is the driver of talent. Meaning the smartest developers in the world at the moment, they're working in AI and crypto, period. There's no other thing. So follow the talent. Don't be accepting, just be open, try to understand because it's coming.
I think we're done now, so yeah. I agree with this. I think it's education is very, very important, the acceptance of the technology, also the mindset. And so, just make sure you have a very open mind around when using crypto and blockchain technologies. It doesn't need to work the way we work now. It needs to work the way it needs to work, right? And so just keep an open mind around that.
Exactly, the way it needs to work. Thank you so much, and thank you for listening.